The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Monday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. We kick things off. NVIDIA, AMD in focus this morning as they'll be kicking back 15% of all China sales to Uncle Sam, the U.S. government. We'll see how that changes the landscape. Is it legal? Is it an export tax? Nonetheless, the CEOs are on board. That seems to be the case. And yeah, you have the S&Ps right now. We were higher. Okay, we just gave back about 10 points. Right now, you're positive by 4 points in the S&Ps, trading at 64.17. Now, that's on the futures. Okay, and I say that because you got quite an acceleration even after the bell. Okay, we're still actually much positive over where you were, but you were up to a high of 64.29. You see that acceleration on Friday at 4 o'clock. You had the S&Ps drive 10 points after the market closed on the futures higher. You gave it back last night on the open, and we're chopping around. NASDAQ, we're basically flat right now at 23,712. Dow barely in the positive. How about crypto, right? Bitcoin makes it up to nearly 123,000 overnight. Let's put it on a daily, just off of the all-time highs. Made July 14th. And Ethereum, again, outperforming. As you're talking about 43.75, but Ethereum, all things considered, still not hitting the highs you hit in 2021. You're in a losing position. You bought those highs almost 4 years later in Ethereum after riding the lows, but boy, it's continual gaps. You put Ethereum on the daily. You're talking about doing a 1 to 1.618 off of the April low. And that number would put Ethereum about 4,600. Nonetheless, crypto in focus. Higher prices on crypto. Boy, we got action everywhere in this market this morning. Crude, recently, lower prices. We hit almost a low of $63. You hit it last night within a penny, 63.02, within 2 pennies, almost there. We're at $64.24. The price of crude. Now, gold is having quite a day to the downside. We're going to get there. The 10-year right now, up 2 ticks. Okay, and the 10-year, 4.27. 4.27 is the yield on the 10-year. Now, you got governors talking about 3 cuts in 3 meetings. There is going to be the pressure for higher price and lower yield. Jump over to the dollar. And we've caught a brief bounce right now as yields ticking up to the slightest degree, but 98.47. Now I bring those in focus because, boy, how about gold? Okay, gold is down $85. $85. Yeah, and that is going from the beginning. Gold closes at 130, folks. Okay, so that's incorporating from 130 to 130. So this move is incorporated in that daily move, okay? But if you take where we were on just Sunday night, gold's still down $55. No huge move in the dollar, okay? You take a look at silver. Silver right now, similar action, right? We just challenged the lows of overnight. There's your Friday action on silver. Silver closed out Friday at 38.55, and we're trading right now at 37.88 for silver. You jump over to AMD and Intel. And so we'll bring over the headline, okay? 15% to all China sales. Now, there's a lot that goes into this. It's a deal like any other, without a doubt, okay? NVIDIA plans to share. I love that word. They're going to share their revenue, right? AMD is going to deliver the same share from their chips, the MI308. Okay? Now, these chips are a few degrees under the highest of technology. Okay? NVIDIA has said they are not shipping them. They made these chips specifically for China. Okay? But then it came that the clamps came down that they couldn't even use China, okay? And yeah, there's a lot in focus, as and you can see, even on the H20, okay? They're obviously China is worried about being reliant, okay, on that technology that's always going to be looming. They're going to be making a push for their own technology. That's the arguments against the state secret, right? The technology ban on China. If you don't allow any of those chips there, in the long run, you're probably going to have Chinese companies that become competitors. Now, easier said than done. If anybody could become a competitor with NVIDIA overnight, they would do that, and they haven't. But, you know, if anybody could do it, it's the Chinese government, to put it lightly. And that's the argue against just cutting them off completely. But both these equities are trading low right now. You got AMD shares, they're down by about $3. Okay, jump over to NVIDIA shares. You're down $1 from 182.70 to 181.40 right now, and you see the drive lower. Okay, so not exactly opening up the spigots in terms of the market rejoicing. Market saying, "Oh, hold on a second, you're open in China," but we figured they were going to have something in play with everything that's been talked about already, and now we're talking about a 15% tax to the U.S. government. They're not sharing anything; they're getting taxed by the U.S. government. Whether it's an export tax, okay, that would be unconstitutional. And so this will, I'm sure, get challenged in court. I don't know. I shouldn't say I'm sure. Who's going to challenge it, right? You have to have standing. We'll see. The two CEOs seem like they're on board. We'll see if maybe their competitors say. All right. Just jumping around to different takes on that move. But yeah, it's going to be interesting to see how these equities move today, okay? Because you would think that would almost be good news for those equities. They can handle that cost if they can do business in China and make sure those chips are sold there. But no, the market's saying no. We knew that something was coming, and now you're talking about 15% of all the revenue going over there is going to the U.S. government. It's a number that the market's taking focus. You know, one of the reasons why market loves NVIDIA, AMD is margins, man. Margins on those companies are just wild. All right, we jump to some other movers. How about movie theaters? Yeah, AMC. Nice little 10% pop going on today. And there's your acceleration on their numbers. Pull up the daily on this equity. Now, that was Friday's action. You're going to open it around 3:30 right now. So you'll be testing these highs we had from late July of about 360. You haven't done any volume since then on this trade lower. Look at that, right? And that was nice. You get a nice sign of strength on July 17th. You trade up to a high of 354. We're going to open at 330 on AMC. All right, you jump to some of the crypto stocks. Coinbase. You're going to pop open $20 higher, well off the highs of 444. You're at 310 yet Friday, and you're going to open at about 320. Yeah, there's your acceleration on crypto. My goodness. Robinhood up by a couple dollars. Amazon shares in the positive. Stay tuned, folks. Monday trading. We got a lot to talk about. We'll be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. We got the S&Ps right now, positive by 5 points. We got the NASDAQ right now, positive by 10. Let's take a look at that gold contract. So I put a new issue of the gold report out this morning, folks. Gold off $85 from Friday, as I mentioned, off about 2.5%. No real huge action in the dollar. Now, what you do have is, of course, last week, the news breaking with potential tariffs, gold bars, 100 ounces, etc. That news turned out to be untrue. Fake news pushes gold to an irrational high on fake news, and boy, that is a ominous sign. And you're $130 off that price level right now, and we could be making a run for the bottom portion of that, 3,200 potentially. Gold chopping around right now, but you're off $85, and you take a look at the dollar. It's not like you've had this dollar strengthen to a dramatic degree that would cause it. Okay, now, if you're looking at a daily on the dollar, that's not a real tick, that bar on the top there. Okay, you go into a 5-minute, that's the only reason. You're pushing the highs of this bar right now at 98.50, so take away that, okay? And you get the slightest of green bars here. The pressure's to the downside on the dollar right now. Nothing's going on. You see when gold can just rip lower like that, 50, 60 bucks. You have silver right now down by 1.7%. And what I'll say on top of that is that going through the gold report, you realize, folks, if you're subscribed to the gold report, folks, I encourage you to not just go through each of the stocks themselves, actually go through, enter the symbol. I mean, if you just go through yourself, folks, right, 25, 30 equities, you go through them all. It's amazing how you see some of the trends, of course, in terms of talking about price, talking about volume. Strong numbers, but the volume right now, a little lacking. Okay, you take a look at even some of them. See if this is. Yeah, I mean, look at AEM. Okay, last week you explode higher. less volume than the prior 2 weeks, right? You take out the week of July 21st, you take out the prior week that had earnings, you do it on lighter volume, okay? Even if you back things up to this huge acceleration on AEM, on those April lows, okay, you look at the week we had a nice sign of strength from May 19th. We're not getting that type of volume last week, okay? And this was a common trend. I didn't even plan on bringing this up, but it's kind of a common trend that, yes, we got quite a bounce last week, but you did not have those numbers in terms of the volume. Is Harmony one of them? No, Harmony had some good volume. Harmony was one of the exceptions there. Let's see, take a look. AGI? Yeah, somewhat. You know, you see this bounce versus the prior week, right? You traded lower on gold, you get a nice bounce. That was AGI. Let's see, Eldorado? No, that's a strong one, man. You just completed the 1-to-1, though. Strong numbers on Eldorado. Take a look at the daily. Yeah, Eldorado is looking like one of the strongest equities in the report right now. Silver equities look strong as well. Yeah, Newmont a little bit. That's a daily. Yeah, there's a good example. Here, check out Newmont, right? Last week, you plow higher. You can't even get as much volume as you had the prior week. 50.3 million versus 48 million, and not even close to the week of 78 million. Right? That's not how you want to break those highs and complete an A to B, C to D. And Newmont this morning going to open at about $67. So be careful on some of these equities digesting quite the moves across the board. You know, one that did have a nice move out there last week, because I know there's a lot of listeners in it, was Vista. I mean, this is how you like to see the volume. Look at this volume on Vista. Okay? June 30th, 1.3. Right? This is weekly volume. 1.9, 2.2, 2.3. 2.7, and last week you break all of that on 3.4. That's nice. Okay, that's the most volume we've had on Vista since that rip-roaring pullback of June 2nd. That's how you like to see it. Some of these equities catching a bounce last week, not doing it with the volume that you wanted to see in the gold market. And listen, that's not going to hell in that gold market. That's just saying you got quite a run going. There's your 1-to-1 on gold. Okay, and boy, the XAU and HUI. Now, this is going to change on the open, but that's what last week looks like on the XAU and the HUI. I'm going to pull it up. You talk about a breakout from the 1-to-1. All right, and the 1-to-618, if that's where we were going, is 254, but we're going to get a pullback on the open on those equities. And HUI, pretty similar action. You get quite a breakout. But this morning, we're going to recoil a bit and look for a test of those 1-to-1. So XAU, HUI, you're talking about the 425 price level. In the XAU, you're talking about 210, 208, somewhere in there, maybe 200 for a nice round number. You know, we talked to our man Tim Ward on Tuesdays and Thursday afternoons. And folks, we've been very patient as well in this gold report. You know, I get some emails sometimes just looking for a few extra equities, but now's a great time to sign up. I know gold pushing it, but we're going to get some opportunities in this market as it looks like gold today, a little bit of a reset. And when you look at the timeline of this consolidation, okay, you're now talking about a move that we've been there for over 4 months in gold right now. 4 months. You made it to a high of 33.71 in April, the week of April 14th. You're talking about a 4-month consolidation right near those highs. And, you know, you back up for reasonable consolidations. That's how long we spent between these two moves. Okay, so that's not outlandish as we chop around right now. And I bring that up as in the market has priced in the rate cuts we're getting, okay? The market is no fool. As in, you're getting Fed speak this morning, talking about certain governors. We're talking about 3 cuts over the next 3 meetings. And yet, you don't have dollar weakness. You don't have lower yields, okay? The market thinks there's about a 90% probability that we're going to get a cut September 17th. And it thinks right now, to pull it up, there's about a 50-50 chance whether we're getting 2 or 3 cuts by the end of the year. So you're either going 2 out of 3 cuts or 3 out of 3 cuts. Okay, the market knows that right now. Keep that into consideration when you're looking for lower yields. But the pressure is going to be Okay, very hard to imagine this market where you get a dramatic rise. Now, the one disclaimer of that, okay, is prices, right? I mean, the Fed goes cut. They get a couple cuts sometime in the beginning of next year. You bring rates down 1.25%. You provide what? The price. My dad used to say, right? You're worth what you can sign for. It doesn't matter what you're worth. What really matters to the economy, because the economy loves debt, right? Take out some debt, pay that debt off, use that capital to create jobs, etc. It's what you can sign for. It's what your signature's worth. 1.25%. Now, I say that as in Goldman Sachs. You can agree with it or disagree with it, but they're saying that consumers, they've only absorbed about 22% of tariffs right now. That number's going to rise to almost 70% if history plays out. We'll be right back for the open, folks.
Better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the S&Ps. Open the session up by 2 points right now. NASDAQ 100 up by single digits as well, up about 8 points. We take a look at the price and volume in this market, okay? And yeah, you had a little bit of a drop-off, actually, in terms of Friday action. NASDAQ, you're talking about on Friday, you traded above Thursday with volume of 447,000 versus 557. You take a look at the S&Ps, and yeah, you're trading 1.133 versus 1.396 the day prior. So we get quite the price extension to higher price. But you're coming into the bars from July 31st, 1.7 million. Okay, that's the bar we're trading into on the S&P right now. You only did 1.1 on Friday. And on the S&Ps, that number you're trading that we just got above on Friday was 729,000 contracts. You did 447 on Friday. So jumping back to Goldman. Take the politics out of it if you can. You don't have to. This is just one person's opinion, a Goldman economist, okay? But in my opinion, which is also one person's opinion, okay, if there was going to be price pressures, it's going to be a gradual deal, especially in the context of the environment that we find ourselves in. Walmart getting called out by name, right, if they're going to raise prices. It's not going to be a instant rise. If it is going to occur, I'm not saying it has to, but if it's going to occur, it would make sense. It would take some time, and that's what Goldman's arguing here. They're saying, hey, right now, okay, when you look at how prior markets have reacted, and this isn't even taken into the pressure of making sure those companies didn't do it politically, just from a business standpoint, right? It makes sense to gradually shift those costs, okay? U.S. companies have so far taken the bulk of the hit. Consumers in the U.S. have absorbed an estimated 22% of the tariff cost through June, but their share is going to rise to 67% of the latest tariffs. Now, what I find even more remarkable is the way that the business itself is going to shift almost everything except 10%. Where is it? No, I missed it. Hold on. Ah, forgive me. And this one? Here we go. American businesses have absorbed around 64% of the costs so far. Their share is going to fall to less than 10% if history plays out. Okay? Still, it's mixed, right? Some are going to take a larger share. Some are going to have less. Foreign exporters have absorbed about 14% of the cost. Their share is going to go up to 25. So where's going to be the resting number here? They think the resting number, this is Goldman, okay? They're saying that right now the number is at about 22% consumers, businesses at 64, and the foreign exporters picking up 14. When those numbers settle, it's going to be more like foreign exporters at 25, consumers at 67, right? And businesses picking up the remaining change, which is less than 10%. That's quite a difference from where we are right now if that plays out, okay? But yeah, the net result, you better believe it would be a bump to inflation if you're talking about a shift from 22% of the costs to 67%, okay? Goldman predicts a year-on-year core PCE reading of 3.2% in December. And they're looking for underlying inflation net of tariffs, 2.4%. That's an 0.8% add on tariffs that they're looking for. I imagine some of you may disagree that that's coming, and we will see if it plays out. But from a commonsensical standpoint, folks, it makes sense that companies like that, especially in this context, would not want to go there. All right. We take a look at Paramount. So let's put it back to a 15-minute, right? You talk about a roller coaster, man, all that coming in at close. Let's see. Yeah, look at that day. That's the week. Oh, that's not even Paramount anymore. What is my, thank you. Here we go. Yeah, so that's not even Paramount anymore. Paramount Global, Peace Sky. All right. Now this one, you're down by a percentage point, okay? Thank you, Fletch. And check this out. I think this is a brilliant play, man. As markets roll over slightly in the red, okay? There's nothing like live sports. We were just talking about this on the deal with Disney, ESPN, okay? The NFL. The NFL is now an owner in ESPN. I saw a commentary recently talking about, you're not going to hear critical commentary of the NFL on ESPN when the NFL now owns 10% of that ESPN network. And yes, I'm exaggerating that you'll hear some, but you better believe they're intertwined. And I think that's a great thing for ESPN and Disney because there's nothing like live sports. Well, guess what? UFC is right there, man. Okay? I'm not a huge UFC fan in terms of knowing the people, but guess what? I'm a huge fan of their product. If I have the opportunity to watch a great UFC fight, I would watch it in a heartbeat. Okay? And many times I don't. ESPN wants me to sign up for it all the time. They're trying to get the rights, the pay-per-view sign up, etc. Okay? But if it was a little bit easier, maybe I would. Maybe if it was intertwined. But yeah, Paramount's going to get it. 7 years, $7.7 billion, and live sports is a separator. And I would agree with the CEO, the new CEO, Ellison. UFC is a unicorn sport asset. You know, NFL would be the unicorn sport asset probably, okay? But they're going to offer the marquee events and additional fights on its streaming, select events on the CBS broadcast network starting next year. Yeah. 13 marquee events, 30 additional fight nights on its streaming service. $1.1 billion a year. And we'll explore buying international rights in the future as they become available. And that's in the U.S. is what they get those rights. I think it's a big one, man. I do. You jump back to some of the streamers. Disney shares up by about 0.5% right now. Traded lower on Friday. Netflix shares right now down by 0.5% as well. We check back in on NVIDIA and AMD. With these things, quite a run, right? NVIDIA down by about 1% right now. That's your weekly. Let's jump to a daily. You know, it is remarkable on the daily, right? You look at these volumes, just extend it. It's just lower volume numbers, lower peaks, lower troughs on NVIDIA. As you push higher, we're at 181, down by 0.9%. AMD down by about 1% right now. Intel, so their CEO is going to be meeting with Trump, up by 5.3%, catching a little bit of a reprieve from the volatility of last week. Intel up by 5% right now. We check in on some of the other Magnificent Seven. Google shares, completing that 1-to-1, right at it, right? Google down by 0.8% right now. Amazon down by 0.6%. You jump over to Microsoft down by 0.2%. A lot of stocks in the red, not Tesla. Up by 3.2% for Tesla. Micron up by 3.6% as well. Market's flat, folks. You got gold right now down by $81, $34.09. Stay tuned, folks. Come right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day, Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. Market's barely in the green right now. You take a look at TKO. This is the company that's the owner of the UFC. Yeah, they're getting a boost today on that news, up by 4.1% right now. All the markets in the green. Bitcoin up $3,600. There you go, 120,600. We were all the way up to 122,955, and then Ethereum up by almost 5%. Look at that lift you just got. Up by $193 right now. You check back in on gold, down about $80, but gold's $15 off the lows, just like that. Gold off 2.3%. Silver right now off 1.5%. Dollar with a little bit of strength, which just drove that gold contract, helped drive that gold contract to some of those lower numbers, and we've bounced just off that number right now on the dollar. All right, how about buybacks? American companies are buying their own stock at a record pace. How about $1.1 trillion in 2025, man? You look at the bright pink here is the completed buybacks, okay, versus what they're announcing they're going to do. The numbers are records across the board, $1.1 trillion here. U.S. companies have announced $983.6 billion worth of stock buybacks so far this year. It's only August 11th. Man. And they're projected to purchase more than $1.1 trillion worth overall this year. The largest companies, Apple, Alphabet, and then the banks, right? Apple, Alphabet, and the banks. How about that, right? JP Morgan, Goldman, Wells Fargo, Bank of America, Visa, and Citi. Those are the largest authorized stock buybacks in 2025. And they talk about the performances. Now, the one last part I wanted to get to this, those against buybacks, okay, you make the case that companies, they're usually buying back their own shares when the market is trading higher. They're usually not the ones buying it back when it's trading lower. Well, what is Warren Buffett doing? Yeah, he's not even buying his own shares, folks, okay? He revealed earlier this month it refrained from repurchasing any shares during the April to June quarter, marking the fourth consecutive quarter that it has not bought its own stock, even with $344 billion. Okay? Yeah. But yes, you better believe it boosts the indices, man. Okay. Now, you jump from here. If you were listening to the program at all last week, I was harping all over alternative investments, right? Giving you the facts in terms of the returns, who's making money. And it's surprising to see an article like this from the opinion piece in the Journal, okay, with very little, okay, very little in terms of factual basis about why Trump is going to give your 401k a boost by allowing your 401k to get filled with private equity investments that private equity investors don't want. Okay? Where are they going to get this money? Now imagine, all you have to do, folks, is imagine who are you competing with to buy these products for? Okay, with. Imagine, so on one end, you're going to have money managers that have funds that they need to put into place for 401k funds. And they know that once they do that, they're going to get hefty fees for these alternative asset investments, okay? Put yourself in that position and think about the cost analysis of what you're willing to pay for those assets if when you procure them, you have to procure them, number one, because you have the money. And when you do it with an automatic income stream, okay? Then compare it to the investor who is just looking on the mere merits of that investment that needs it to grow to make any money whatsoever. Okay, and yes, that's a generalization as well on that side, because that's not exactly how it works on the other side. There's fees everywhere, okay? But I don't understand how anyone thinks that money managers on their behalf are going to be getting the best deals for private equity out there. Because where are you going to be getting them from? You know, new deals, you're competing with the best on Wall Street, man. And they're going to be vicious for the deals that matter, right? And overpay for the deals that matter. And they're going to underpay for the deals that don't, and the fund managers are going to need to deploy that capital for those funds. I mean, they bring up in this case, folks, okay? Unfortunately for the investors, investment opportunities in public markets are shrinking. In 1996, there were 8,000 public companies. That number's declined in half. Why? Because public companies are subject to increasingly burdensome disclosures, right? So they're saying, you have to be so regulated with telling everybody about the company. Why not allow 401k funds to go into where companies don't have to be subjected to so much disclosure? I mean, you read this thing. You better believe it's an opinion piece, folks, okay? But I'd be hard-pressed if this is on a longer-term basis. Now, check this out, okay? American has more than 700 private companies that are unicorns, that are billion-dollar companies. 700 of them, okay? You got SpaceX and OpenAI as the two biggest at $400 and $500 billion. Both remain private. If you think that they're going to give you a piece of this action that Wall Street's going to pass up on at a decent, reasonable valuation, that's not how this is going to play out into these funds, folks. Now, the one part that I wanted to get to on this, okay? And we've already stated, too, there's a lot you can do with the self-directed IRA, folks, okay? For the astute investor that probably is informed well enough to be an investor in this arena, you can do it already. You can. You can set up companies within your self-directed IRA, folks. You can hold any type of a hard asset. Okay, there are restrictions that go into place, but you can do many of those things already. Now, check this last part out. Where was the 2% here? They were talking about, come on. Here we go. 401k plans are missing out on potential strong returns. Well, if that's the case, why is Harvard and why are these companies unloading private equity? Okay, that's why I mean this is like the most anecdotal general comparison of anything. Buyout funds have delivered net of fee returns that have beaten public market returns by roughly 2% each year. This includes recent private years when public market performance has been particularly strong. Private credit has also outperformed public debt by at least 2% over the past 10 years. The fees are going to be more than 2% on these things alone. They don't mention that at all. None. Okay? There's no mention of the radical fees that are going to be in place that companies like Franklin Templeton are licking their chops over. Okay? And then there's no comparison of how that is going to compound on an annual basis. And there's also no discussion in this article about how basically 25% of the fund managers for private equity or the private equity players are the ones making all the money. 25%. 75%? No, they're in trouble right now. Who do you think is going to know what assets are worth what? And what assets do you think are going to end up in the funds that are pushed off to investors that never look at anything? And the last part that they don't mention is how are you going to mark to market any of those? I'll keep talking about it, folks, because it's going to matter. S&P's up by 2. We'll come back. We'll talk some other equities. Don't go away.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. In the last part of that conversation on private equity, where's the mark to market? Nobody's talking about that aspect of funds, of debt, of, mark to market and those valuations that ties into all of that as well. So keep that one on your radar. And keep it on your radar, folks. Speaking of, coming up next, we got our man Basil Chapman with the Tiger Technicians Hour, as he does every day at 10 a.m. And folks, tomorrow at 4 p.m. Eastern Time, our man Basil Chapman, he's got an outstanding webinar coming up for opening call subscribers, folks. All you got to do is check out the opening call. It's right on the front page of TFNN. You click that button, you'll get brought to Basil's opening call sign-up page from 4 till 5:30. So a 90-minute webinar tomorrow, folks, identifying trend changes and what action to take. He'll be talking about technical tools that help identify those trends and their changes, sector rotation, stock selection, trading around core positions, using money management to maintain your capital, and he does an outstanding job as an educator, folks. Basil does 90 minutes. It will be archived if you can't attend live, and you can sign up right now, folks, for $149 a month, and it comes with a 30-day money-back guarantee, okay? If you're planning on keeping the letter, which I encourage you to consider that during your 30-day free money-back guarantee free trial, check out the 6-month. Okay, you got a 30-day money-back guarantee no matter what on all these, but nonetheless, folks, you got a 3-minute break until Basil comes up. Okay, take advantage of that 3 minutes. Head on over to the front page of TFNN right now. Sign up for the opening call. You'll get Basil's outstanding newsletter for 30 days. You get tomorrow night's webinar, which will be archived, and you gain access to all those archived webinars he's got in there as well. So check it out tomorrow. Outstanding. I'll be in there watching that for sure. S&Ps. Flat right now, 64.14. NASDAQ up by 13. And why not? We'll finish it off with NVIDIA and AMD. A little volatility, right? Talk about some volatility. NVIDIA down by 48 pennies right now. AMD shares back in the positive by 0.3%. Intel higher by 4.1% right now. Folks, thanks so much for kicking your trading day off right here at TFNN. Have a great day. Have a safe day. Basil Chapman's coming up next. And check out the opening call on the front page of TFNN for that webinar tomorrow. Have a great one, folks. We'll see you at 3 o'clock.